So unless you've been living under a rock this past week or just don't follow the mainstream media or news, which is probably a good thing, you would have heard about the Evergrande Debt Crisis in China. Now, I'm not going to spend a lot of time talking over the situation in a lot of depth. There's a lot of channels and a lot of publications that have already done this. I'll leave a link to a few down below so you can get a detailed breakdown of exactly what's happened. We are going to summarize it here so we do have some context, but I want to spend some time talking about is how this potentially impacts any investments we have in China, how this impacts foreign investors, and what it means for some Chinese companies going forward and the Chinese economy. So just for context, what is Evergrande? So Evergrande are the second largest property developer in China by sales. Very big company, did around 70 billion in revenue last year. It's one of the biggest property development companies in the world, and essentially what's happened is they've developed all of these properties, or loads of different properties in China, in these cities where there's been little to no take-up, i.e. no occupation. So in theory, a lot of these properties are generally worthless. Now, you couple this with the fact that they have around 300 billion in debt, which it's likely to default on, which could potentially impact the Chinese economy in a big way, and also countries everywhere else, because they obviously have some offshore debt that would be due as well. To put that $300 billion of debt into context, just to show you how big it is, Russia's entire state-owned debt sits around 257 billion. So yes, this is a big amount, and if they default on the debt, there would be a big shake felt in the wider debt market. And so how has this just become a bigger issue now than ever? Because Evergrande have had liabilities for a very long time, or liabilities in excess of their equity and their income for a very, very long period of time. 300 billion in debt versus just 70 billion in revenues is obviously a huge difference. And remember, this is a property development business, so anytime, although they do venture out of that slightly, which doesn't make much sense, but the business that they're in, it requires debt to finance a lot of their projects. So what's come about now that is making this a big problem? Well, first of all is an interest payment that's due today, around 83 million, and another repayment for a different bond due next week that's around 47.5 million. Now, Evergrande on September 14th told its investors it may be unable to fulfill these obligations, meaning it could potentially start to default on repaying some of its debts. Now, a lot of this is the fact that they've developed a lot of these properties and they're not going to be bringing any money in for them. They said in an investor letter they expect significant declines in contract sales in September, thereby resulting in the continuous deterioration of cash collection by the group, which would in turn place tremendous pressure on the group's cash flow and liquidity. Essentially, this company is illiquid, and if it doesn't have any cash flow to service its debt, well then it's most likely going to default. And as you would expect, and what's been taking a lot of the headlines is, aggrieved home buyers, people who have put money into the company, got suppliers, and even employees were gathered around the Evergrande offices this week and last week to protest and ask for their money back, as the threat of the potential liquidation of the company or default on the firm's 300 billion in outstanding debt is obviously causing a lot of panic with these stakeholders, and like I said, the world financial markets as well. And so I guess the biggest question here for a lot of investors is, does this cause systemic risk? i.e., is it a massive threat to the overall system, and can we expect everything to be affected? And there's been comparisons with the Lehman Brothers fallout in 2007-2008, and it has some similarities in that it's a large amount of liabilities that they're probably not going to be able to meet, or definitely not going to be able to meet in the way that it's structured at the moment. But then again, it's not a bank, it's a property development company. There are individuals, corporations involved who will probably lose a lot of money because of this, but the main difference here is that China's financial system versus what the US and Europe's financial systems were back in 2007, 2008, is that they're not commercially owned. So they're owned by the state and essentially influenced by the state, meaning that even though China won't necessarily want to be seen as bailing a company out for being stupid in capitalism, i.e. taking on too much debt to grow the business, they can enforce industry lending, i.e. the financial system that they run, to lend and provide liquidity, not necessarily to Evergrande, maybe to Evergrande, but to the other companies who may be affected by this in ways that were not possible in 07, 08, 09 in the US or Europe, because essentially all these privately owned financial companies were too scared to lend out money to people. Everyone was afraid of their own liquidity, that they were not doing that. Whereas with China, technically, they could enforce this lending through their banks. Now, the flip side to this, and it's not necessarily systemic risk, but definitely means that there is some systemic risk, at least that could be contained in China, is China's debt problem is quite serious. This is obviously just a very inflated case of that, but China's debt problem is quite serious. We have, a debt to GDP ratio that is higher than you would see in a lot of other countries, and that would suggest to you that the growth that we're seeing is at the top end of the boom and bust cycle, and it's not necessarily sustainable at this point. Now, this brings us on to what may be the real risk to foreign investors, or we'll keep it to know people like us at the moment who are foreign equity investors. At the end of the day, we're not the debt holders of any of this, so we're not directly affected, but what could be some of the indirect effects that we see as foreign investors? And one big thing that I've started thinking about, with the debt problem that's starting to show itself in China, is that in an effort to change the system and deleverage, we may need to see China's economic growth start to slow. It's shown signs of obviously slowing in the past few years, only natural though, as it was up around 8 to 9% economic growth per year. As it's getting more developed, it's sat down to around 5%. We did see most recently the retail sales output in China dropped to around 2.5%, although the state in China said this was more to do with the virus than anything else, and lockdown restrictions and things like that. But definitely could be a concern. If an economy wants to deleverage and essentially change their system, then inevitably it's going to lead to slower economic growth than we're seeing at the moment. So that's definitely something to think about. I'm not saying it's definitely going to happen, and in a lot of cases, forecasts are that China's economic growth will slow somewhat eventually. I think the main thing for us, and especially for me as an investor in some of the companies that I have, like Alibaba, Tencent, and JD, and things like that, is more the GDP per capita, so the purchasing power for each individual in the company. That seems to be rising pretty healthily at the moment, and is expected to almost double in the next 10 years, which is what I'd like it to do. But the risk really here is that we see this slow down and it doesn't double. It only goes up around 50% in the next 10 years, so around 2.5-3% compounded rate. That could be a risk, and essentially would mean that some of the thesis, or at least some of the appeal or attraction in owning some of these Chinese companies, is taken away to an extent. So definitely something we need to think about. It could all be a bump in the road, and I think it's a possibility that all of this is just a bump in the road to China figuring out a lot of this fast economic growth, but it's definitely something to keep an eye on, like I say. And the last real fundamental and probably most severe risk, but also the most unlikely, I think, is China hitting the reset button on the growth-like state-run capitalism stance we've seen in the most recent decade, or even decades. Them hitting the reset button on that, saying, we don't really like how things are starting to pan out. We're seeing too many signs of corporate greed, people acting in self-fulfilling ways that are hurting, or maybe hurting, the wider economy, and most importantly, customers and the population of China. They could potentially take a stance on this that say we want to stop that and we want to change the system and come away from the trends that we've been setting out in the past decade or so. Now, I go back to what Ray Dalio said in a post when he spoke about China, and I did a video on that as well if you want to listen to that, where he talks about the Chinese authorities are for running, a state-run capitalist economy, and the trends that have been set out over the past decade shouldn't be ignored, and they're showing no signs of going away. He also talks about how people he's close to in China who are on a level of authority, and how trends that they've set out in China in terms of state-run capitalism over the past few years are there to stay, and they are looking for prosperity and growth in the economy, and not looking to go back to how things were when a lot of the population were in poverty. But it is just something to think about, and there are some risks involved there. The job we have is obviously to recognise them, but then make our own judgment on how likely they are to happen. Now, this brings us to the last point, which is what I will be doing. So what am I doing with a lot of the positions I have in China? Obviously, I have positions in Alibaba, Tencent, JD, Baidu, right? A lot of the Chinese companies, some bigger than others. My biggest one being Alibaba, and then a more sizable one being Tencent as well. But The short answer is nothing. And the reason being is that I've presented some risks there and talked about what the real risk factors will be, but how likely they are to play out is a completely different story. And at the moment, I don't see it as a systemic risk. And with the companies that I'm invested in, they're all very well capitalized, and I think they will all remain in a strong position going forward. So there it is, guys. Just an update on the Evergrande crisis, what's been happening, but really how this could impact Chinese stocks that we would be invested in as equity investors, foreign equity investors, and then what I'll be doing about it. So just a quick update. Hope you enjoyed it. If you did, I'd appreciate if you leave a like on the video. Subscribe to the channel, obviously, if you haven't already. I'll leave a link to the Patreon in the description so you can go and check out some of the additional benefits you can get by supporting the channel. You'll also get access to the Discord community as well and things like that. So go and check that out. But until next time, and maybe when we find out more about this situation, good luck with all of your investments.